Welcome to this tutorial video. In this particular tutorial video, you are going to learn about futures trading, perpetual trading. This is for beginners who are just new into the crypto trading sector. Everything about futures trading is what you are going to learn in this video. Right here, this is bookers.io website. In this website, you can learn many things from this website. You can get a course, profitable crypto trading course. This profitable crypto trading course will teach you everything you need to know about crypto trading, both fundamental and technical analysis. Here we have social media management and all that. In this same website, bookers.io, we have free courses, and these free courses are courses that you can teach you how to trade cryptocurrency. Okay, but that's not what we are here today. What we are here today is on how to trade crypto futures trading for beginners. So let's get started. This is article that I published yesterday about beginner's guide in crypto trading. So I am just going to skip to where I talked about futures trading. You can come back to this website and read about these articles. Okay, this article will help you as a trader. So I'm going to leave the link in the description of this video so that you can go and read these whole articles. But right now, I'm just going to focus on the futures trading aspect. So many people, why I'm doing this video, I have did many videos about futures trading, but then I didn't give a detailed explanation about how futures trading work. I just performed a trade. But I think there are some people that a question someone asked me, and then I decided to do this video again. So what is futures trading? This in all similar terms is called what? Contract of difference. Is an agreement made in a financial derivative trading where the difference in the settlement between the opening and closing price are cash settled. So when you are trading futures, every transactions are cash settled. What I mean by cash settled, we are not talking about physical cash, but the main thing about is that you are not getting any asset in return, unlike spot trading, where you place a trade and you get an asset, which is the coin you bought, in return. But then on futures trading, you don't get like that. On futures trading, everything done on futures are cash settled. You receive the money, you make profit or you lose. That is the meaning of, and everything in futures trading is calculated based on the opening price and the closing price. Okay, so let's get further. The contracts are similar to futures in a way that users are being led to speculate on the price movement of an asset. Details. In futures trading, a user must incur funds kept as collateral to open a position. So a user must incur funds kept as collateral, that is the money you are using to open a trade position. If the trade of the asset moves in favor of the user position, then he makes profit. If the price of that asset moves in favor of the user's position, then he makes profit when the position is closed. That means if you are opening a position of longing BTC and in the closing of your trade BTC is still long, that means you made profit from that trade. That is the meaning of a futures trade. But if it moves in an opposite direction, the user will receive fewer assets different from the opening amount. So if the move in if the move of that position is in opposite one, let's say for example you long BTC and then BTC started shorting, that means it's going in an opposite direction. And if it's going in an opposite direction, that means you are going to lose money in trading that asset. Also, futures trading is also like predicting whether a coin will go up or will come down in price. This is called long and short. Buying means long, sell means short. In futures trading, we make use of leverage. How does leverage trading work? This is very important for those asking how does leverage trading works. Leverage is a trading mechanism investors can use to increase their exposure to the market by allowing them to pay less than the full amount of the investment. Consequently, using leverage in crypto transaction allows a trader to take on a greater position in a trade without having to pay the full purchase price. Is different, is simple as this. This definition is just simple as this. Leverage in a trading it is a mechanism that traders use to increase their exposure on the market. Maybe you have $10 and you want to open a position and make higher profit. If you trade $10 long BTC without leverage, you are not going to make higher profit. But when you long that $10 using 10x leverage, your $10 will turn to $100. And when your $100, you use $100 in trading BTC, you are liable going to make $10 per you're likely going to make $10 per 10% move in your direction. That means that is the why leverage trading is very, very important. Using leverage is thereby exposing yourself to much risk of liquidation. The higher the leverage, the higher the risk. And in leverage trading, you are also bound to liquidate your position. What is liquidation? Liquidation occurs when you are not able to fulfill the contract. Let's example, when the contract start going against your wish, then if your capital is less, you are bound to be liquidated in that position. That is leverage for you and everything about leverage. So I'm going to go ahead right now in MaskEX exchange and perform a trade on the futures trading, and you can come in this website later on to read about this article. This website is my website titled bookers.io, and you can go through the link in the description of this video and you can come here and read more about this. Let's go to the practical. Here I am in MaskEX exchange, the practical aspect of this trading, and we are about to perform a trade right here. So BTC is currently on the longing mode, so let's perform a trade. This is futures trading, and for the first time, if you log into this area, the next thing you do is first you select your leverage. As I have told you in the beginning and you have understand what the leverage is, we are going to use 10x leverage in trading this position. So you click on 10x leverage. The next thing is you select your trading pairs. These are trading pairs. What is trading pairs? Trading pair is simply the pairs that are bonding to USDT. For example, BTC/USDT. It means you are trading BTC in an exchange of you getting what? In an exchange of you getting USDT, or you are trading USDT in an exchange of you getting BTC. BTC is a popular coin and we are going to make trade on BTC right now. I have selected the leverage I'm about to use, and the next thing I have selected the currency I'm about to trade. Then the next two things here is we have what we call here, we have the market, we have the limit, and the plan. These are three things that we have here. We have the market, we have the limit, and we have plan. Now let's explain this market. Okay, we are going to explain market right now. What is market? Market means buying at the instant price of the market. For example, when you are buying at the market, you are buying at this current price here. Now remember, BTC is trading here, so BTC is trading one. I'm not good in drawing, please, guys. Okay, BTC is trading 17,190. That's the price of BTC. And when you are buying at this market price, it means you are buying at the current price of this. You are buying at the current price of this. You are removing liquidity from the pool, so you are not going to bid the price. You understand? Now this is gone. That's market. So if I want to buy on market price right now, it's very simple. Once I click on, let's say I want to use $100 to purchase the position, which I click on buy, it will automatically execute this trade without even bidding the price. You can see that it has automatically executed this trade. That means it's buying from the current price of the market. Hope you understand. Let's close this position and let's check the next one. Now the next one we are going to explain now is called the limit. The limit. Now what is the limit? When you put in limit here right now, when you click on limit, you are going to see price amount of USDT. What it means is that, for example, the price of USDT right now is 17,185. I can choose to buy USDT at $17,000 with my $1,000. Okay, with my $1,000. Now I want to buy BTC with $1,000 at the price of $17,000. When I click on this, it is going to land me to a current order without executing the trade. It because of what? It is a limited order. It is what? A limit order. It is what? A limit order. When this trade will trigger is when the price of BTC finally falls to my 17,000 or $17,000. When the trade finally falls to $17,000, then this order will trigger. So you understand now that limit means bidding the price, and in this limit, another difference in this limit is you can be able to set your stop loss only when this trade has triggered. Only when this trade has triggered to position, that is when you can now set your stop loss, take profit and everything. Unless that, you cannot set that. Only when this trade has triggered. That is about limit buy order. The next one we're going to talk about is the plan. I'm going to cancel this one. So let's talk about plan order. This is plan. Plan means planning your trade. You put everything at the goal. You set the price, you set the amount you want to buy with, you set the stop loss, you set the take profit, you set everything at the goal. So let's do planning. 17,008. Okay, let's say 17,175 is the amount, is the time I want to buy this. I want to go on this trade with $1,000. Okay, Now I am going to plan my trade. Then you click this place. There is something here. You will click it. You tick this line. Then it will give you a drop down of stop loss and stop profit and stop loss. Okay, you need to click. So for example, let me retick it again. Now for here, now there is a tick line here. You tick this place and it will give you what, a drop down menu where you can now set your stop loss and take profit at the goal. Now let's tick it. It will just tell you like this. You tick it, then it will now show you here. See what we are seeing now. We are now seeing take profit, stop profit, stop loss, stop price, stop loss price, and others. So we can now set our stop loss, stop profit price, and stop loss price. Okay, for example, I want to stop this trade at 17,300, and that is my take profit. Okay, so I want to take profit at 17,300. Now the next one is stop loss price. Okay, I have seen and I want to stop loss at, if the trade goes to 16,900. Okay, this is the time I want to I want to stop the trade. Let's say 16,950. This is the time I want to stop this trade. Okay, I have set everything and I can now click confirm. Once I click confirm, everything will just click and the trade will set, waiting for trigger to happen. Now there is another thing. If you want to set by percent, for example, I opened a trade and tell you to take profit at 25% on 10x leverage. You just come here and tick 25%. Then I told you to stop loss at 50%, or I told you to stop loss at 40%. So you can see this, or I tell you to take profit at 60% of the trade, and then stop loss at 40%. Now when this is by stop loss, you can just come here and click confirm, and it will execute. The next one is by amount. For example, I want to stop loss by the amount of 200 USDT profit. Okay, 200 USD profit, and I want to stop loss. I want to just lose 150 loss in this trade. Now one thing you notice is that if I'm setting this thing, you can see here it's showing me the percent. This is why MaskEX is very good. See right here, it is clearly showing me how much I'm losing and how much I'm gaining. See, what it shows me here is that if this trade, if I should make $200 profit from this trade, that means my trade needs to just move 20%. You can see it here at the price of 17,519. Hope you are understanding this. And if I am to lose just $150 in this trade, it means that I am losing 50% from my opening price, and the price that the trade will trigger to close is 16,916. So when the price of BTC falls to 16,916, I am going to lose $50. Hope you understand. And when the price of BTC goes to 17,519, I make $200. So this is about planning your trade. Now let's set this one. So once you are done, you click like this and you leave it. You leave it to trigger. So let's set the one that we want to trigger. Okay, Once you confirm it like this, you can see then you click on buy. Once you click on buy, you can see the order will come here. There is difference between this plan and the limit. Hope you understand the difference now. I am setting everything at the go and it will be triggering at the go. This is it. Let's set the one that will trigger immediately so that you can see how the triggering do occur. So we set that we long BTC at 188,887 and at the price of $1,000 and $1,000, and then we stop price at 17,200 and the stop loss at 17,000. Okay, then we confirm this trade. Buy. So guys, let's wait just a minute to see if the price of BTC falls back to our price, which is this price right here. This is trigger condition. It will trigger, and if it triggers, we will go in the trade. I want you to just see how the trade is going to trigger. So this is about futures trading on MaskEX exchange. The link to register on MaskEX exchange is in the description of this video. Please do well and click the description link and register with my code. My registration link code there is 9AH8UJ. Our trade has triggered. Did you notice something? Our trade just triggered and it disappeared from current order. It is no longer order, rather it is now a position, live position. So let's check our live position and see how our trade is running. You click here and you see that you are now about to make the whole money you want in this life. So this is how trade works. This is how to open trade. This is how to open futures trade. This is the application opening of futures trade. So if you want to check your history, you can definitely click here and your history of all the trades you have did will appear. So next thing is this. Okay, now another thing I want to show you is, for example, this trade is running and you want to add more money to this trade. So I open this trade with $1,000 and I want to add more $1,000 to this trade in order for my profit to increase. You can do that on MaskEX. This place, see, add principal. Principal is the money you use, more your capital money. This is money. So when you click on add principal, I can see here you see select how much do you want to add. Remember, your opening was 1,000. It is just telling you. So I can put $1,000. Click on confirm, and $2,000 has been added here. You can see it now, $2,000. Okay, what happened here is that it just reduced the weight here, and then any simple move here, the price here will increase. The profit I'm making will now be tripled by 2,000. Will now be calculated by $2,000. Hope you understand this. Now another important thing is trailing your stop loss. For example, now I just made $2. I want to take the $2 profit I made here. Okay, or I want to take $0.70 profit that I made here, or I want to close this trade, but I don't want to close this trade fully. I just want to take partial profit from this trade. Next, I click on close. When I click on close, I have taken partial profit from here, and you notice that something changed here. Okay, my amount here is no longer 1,000. Is no longer $2,000. Rather, it has reduced to $1,771 because of what? I have closed partial of my trade. I have removed some money from my trade. This is very important, guys, and then all these features are only on MaskEX exchange, and that's why you can use the link in the description of this video and then you download the app. So this is all about futures trading, guys. I hope you learned something today in this video. These are currency pairs. You can open 2 positions per once. For example, I want to open Shiba position. I want to open Shiba long. I can just put $200 here and then click on long, and boom, Shiba is on long. I've opened Shiba using 10x leverage. Okay, the same thing goes if you want to open you can open multiple positions as long as you want. You can set 100x, but while the trade is running you cannot set. Only when before the trade opens you can set. So guys, I hope you have learned something great today, and if you like my content, please do well and subscribe to my channel. Invite your friends to watch my videos. If you are watching from Facebook, please invite your friends to watch my video. Thank you for watching my video today. Do have a great day.